This is the MTPredictor weekly market update for November 2nd. So we got through another Fed week last week, and you can see the results of this is the daily chart of the ES here. This V bottom that did play out. Again, we had the nice high volume spike indicating that professionals were stepping in, confirmed by the blue buyers candle here, and we anticipated if they took that high out that we would get a rally initially just to the 1900 level, but you can see it really blew right past. We closed Friday in our 60-minute decision point. That's a smaller time frame resistance level, but here if we take a decision point off of the prior high here, you can see right around 2040 will begin the next larger degree resistance level here. And I expect that the market is it's extended. It doesn't mean it doesn't have further to go. I think they'll probably want to try to run this up to this 2040 level, make that new high, and in this 2040, 2060, 70, where is that, 2040 to 2070 level here, I would anticipate then we'd maybe get some selling in, because the market would really be overextended there and due for some corrective action, maybe down to back down around 2000. If we look at the weekly chart, if you remember, we were in a wave 4 on the weekly chart, came into that wave 4 with the nice blue buyers candle, again indicating that the buyers were overcoming sellers. They took that out, and here just shy of the wave 5 minimum wave 5 target here. So again, that the top of the wave 5 target there is at 2040. There's your daily resistance, and then the typical wave 5 target here. That'll begin at 2075. Right, so we've got a lot of resistance in up in once we get up into above that 2020 level, and then 2040 really starts getting to the larger degree resistance there. So we'll see if they finish off at least in around 2020, maybe to 2040, and then I anticipate maybe some small pullback back to around the 2000 level. We'll see. So again, the big news was of course, the Fed announcement, the strong dollar really rallied. The interest rate hike is back on. QE ended. At least any new QE has ended. They're still rolling over their current portfolio, the Fed is. Let's look at the dollar index here, and you can see the dollar index. This is the weekly chart. Okay, made a new recent high here, and if we check the pattern here, you can see we've come into that, or in that extended wave 3, and this larger degree monthly. This is a decision point off the monthly chart. Remember, we talked about this is a major resistance area. These are these levels here that the market for several years was unable to take out. We took that level out into the DP off of the high of those levels there, and that's the area we're in now. Now we want to see if they can close above this area. We still have strength on the STF. This was indicating, when we get back here, this was indicating that there was more upside ahead, and of course we did get that upside here. Now we'll see if the dollar strength continues, or if we begin to correct into wave 4. If we're going to look at gold and silver, and you'll see those are a little overextended to the downside. If you're looking to sell those, I'd probably wait for a bounce in the metals, maybe a pullback in the dollar, and but if we don't get that, if the dollar takes this level out, again, this is a big event if it does happen, because we can see on the monthly chart, again, there's our significant low, which means this is a potential wave 1. This is the first ABC correction in a potential new trend, and so the target then, if that is, if I open this up a little bit more here so we can see, So if this is a wave 1, this ABC correction is in a wave 2, here's the typical wave 3 target. Right, and that would mean that we would be taking out, here's your major resistance levels here. We're in that DP off of that. Here's your minimum, your typical wave C's. But if this is a significant low, then we may be heading up into wave 3 here in the dollar. And so that's why you've seen your gasoline prices have dropped. A lot of the commodity prices have dropped. The metals, obviously oil, and so you're paying less at the pump. But this would be a potential deflationary trigger, so it will be interesting if the Fed tries to control that or get control of that. If that happens, they talked about the dollar, the strong dollar, in the minutes prior to the Fed announcement a few weeks prior. It didn't really talk about the dollar. Fed's pretty happy with the way the economy is kind of shaping up, the jobs picture, and so QE came to an end. It looks like the rate hike next October, that may be moved up to September of next year. All right, so we'll see if the economy is really on solid ground and recovering, or if we're going to end up getting another QE. So what's happening with the dollar is, because QE is ending here, we're not printing more dollars in terms of QE. But Japan is, a lot of these other countries are debasing their currency, and so the value of the dollar in comparison to the other currencies is rising, and so this is something to keep your eye on, because it's going to drive so many other things, including your oil, a lot of commodities. Let's look at gold and silver here while we're at it. All right, let's look at gold here. It's a monthly chart, but well, you can still see on the monthly chart the potential. Let me go to the weekly chart. I think it looks a little better on the weekly chart. All right, so was this our wave 3? I don't want to. Here was this descending triangle here. Again, this was the base of that triangle. Alright, so this is again weekly chart of gold, and you can see that descending triangle. There's the breakdown of the base, or that support level, and then we had a new descending triangle that was forming, again the base here, and you can see gold. This is what we were looking at last week, as gold was coming off that support level. We were looking for maybe a rally back to the little upper trend line here, the top of the triangle, and then the sell-off and potentially breaking that level. But you see, we did close, things did reverse, and gold did close below that support level. So we're going to have to see this week if that low gets taken out. Then it'd be pointing already to more downside there. Obviously, again, this is all tied with the dollar. If the dollar corrects, then maybe gold gets bounces back up above its support. But if gold's going to continue higher, then that's going to put pressure on your gold and your silver, and we won't have time to look at the other markets. But silver in a lot worse shape. Again, here was that descending triangle where the wave 5 came in. That was the high of the triangle there. Your base here, all these supports that it would rally off of. That broke down here. Right, then it formed that wave 4, and you can see the new descending triangle that is formed. That formed here. That broke down. So gold is just kind of at this point here, but silver is already broken down. And you can see here was our initial wave 5 target here. Here was the DP off of the prior low, that wave 3 low. That's been I think we did get a close below that level as well. What was the close? 1610. It looks like was the close there. All right, so here's your next support, and that one comes off of the bottom of the wave 1, this DP here. All right, that will start right around the $15 level there, down to what is that, 1435, and your typical wave 5 is this pink level here. All right, so looks like silver, if it takes out last week's low, you're probably heading down around 15 before it's going to find any more support there. All right, so so basically, I won't get into all the charts, but any of your currencies paired against the dollar, if the dollar is going to be strong, if it's going to make that big wave 3 monthly wave 3 move up, then you can expect that we're probably going to get a good number of weeks, if not months, of dollar strength, and that means basically, selling the weaker currencies against that. So on any kind of rallies anyway. All right, so we'll wrap it up here. We'll be back next week. We'll see how things shape up, and we'll go from there. So enjoy the trading week, and we'll see you back then.